Hello, everyone. Good morning to you from this part of the world, and depending on whichever part of the world you're tuning in from, good afternoon and good evening. I'm excited to welcome you all to our first edition of the Forex Morning Mastery session for this week. I hope you all had a great weekend and are feeling ready to tackle the week ahead. To make this more exciting, let me know how your weekend went and how you're preparing for the market this week. Write in the comment section. And as some of you know, I spent most of the later part of last week all through the weekend with my daughter at a tournament, so I couldn't run through the usual weekend videos and of course the forex market prep that we normally do on Sunday. But it's all good. We are here now, and although I don't have too much time before I head back to our venue, I just feel it is necessary that we take some time out to prepare, at least if it's going to take a little while. I'm going to go over a simple but yet effective plan to navigate this current week we are in. So we've got some interesting setup evolving, especially with big economic events that are sure to bring some volatility during the course of this week. We're going to be talking about the GBPUSD, where there is growing pressure on the US dollar with speculation around a Fed rate cut, and of course the UK inflation data and the Bank of England's policy decision coming up this week as well. And we could be seeing some actions which we are also going to be delving into and see how we can actually strategically position ourselves for the next move. And of course, we are also going to be looking at the USOILSPOT, where we've had some based on what I saw this morning, there is an economic data coming out of China raising concerns over fuel demand, while OPEC's downward revision of demand growth is also adding pressure on prices of crude oil. So we are going to be looking at this too as well today. And lastly, my favorite asset, gold, which is currently seeing a pullback from its record high as at this morning after the Asian session. But I still think that the softer inflation, the US, and of course the sentiment surrounding the Federal Reserve rate cut speculation should keep the gold commodities supported at least, especially as traders stay cautious ahead of this week central bank's meeting. So it's quite I expect it to be an interesting session, so make sure to stay tuned in. You don't want to miss out on these market moving ideas that we will be deliberating on today. And for those of you who are actually joining us for the first time, you are highly welcome on board. I am very, very excited to have you join me this morning. And to give you a head up to what we usually do here, we usually come together 3 times in a week. That is Mondays, Wednesdays, and Fridays, coming together to do follow-up details on the asset I personally monitor on a weekly basis. And trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually could help you in developing your own trading strategies, irrespective of whatever type of trader you are: scalper, day trader, swing trader, or even a positional trader. And it's important for me to also emphasize that this is not a signal service platform, but an avenue, an educational avenue where we all come together to understand how market participants are behaving using fundamental factors and price action based analysis to position ourselves for the next move. So I once again welcome you on board and encourage you to actively engage in the comment section. So, with that being said, we will be diving right into the business for today. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be influencing the sentiment in the market today. And of course, by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, of course, better timing to position ourselves for the next move. And based on the assets we are monitoring for this week, we are going to be focusing on high impactful economic features from both the United States and the United Kingdom economic docket. However, on days when we do not have high impactful event, we will be incorporating mid-tier economic features so that we can at least have an insight into what is likely going to be guiding the sentiment in the market for that day. Now, talking about this today, Monday, September 16th, we do not have any high impactful event from these economies. So what I did now was to include the mid-tier economic features, and in fact the only one we are going to be looking at today is the New York Empire State Manufacturing Index. So you see, this data is going to be coming up in about 4 hours from now, and it's a data that gauges business conditions for New York manufacturers, and we all know how sensitive the manufacturing sector is. And of course, if a positive result comes in, it will usually indicate a positive sentiment in favor of the US dollar, and if it comes in negative, it's likely going to impose a negative influence on the US dollar. And if we look at the previous data, that is for the month of August, it came in at a deficit of 4.7, as you will see here, which is not good at all. And consensus, that is market participants and economists, based on what is on ground right now, are expecting that it will also come in at a deficit, but a little bit higher than the previous month, at a deficit of 3.9. Now, we don't know what the actual data is going to be like, but from what we see here, it shows that there's been a little bit of improvement in that particular sector. So we look forward to see what the actual data is going to be like today. Will it be just as market had expected, or even beyond market expectations? And of course, this will definitely give us an insight into what is likely going to be happening. Then before I go on, it's important that we also talk about the economic event that will be influencing the sentiment in the market this week. And of course, the anticipation of this event also will has its own way of influencing how market participants will behave, and we may likely see an extended sideways trading activity in the market, as major key players in the market may likely step aside, waiting for this data to come in before making any aggressive bet. Now look at, we have Tuesday, we have the retail sales data from the United States, and on Wednesday, we have the consumer price index. Remember, this is an inflationary data, a data major key players in the market will be looking forward to understand the inflationary status in the United Kingdom, which obviously will be influencing the Bank of England's interest rate decisions. Then we're also looking at the interest rate decision from the United States on Wednesday, later on that day. This is another high impactful event we want to be looking forward to. And of course, the Fed chairman is going to be speaking at the FOMC press conference, where he will be giving market participants, investors, an insight into the US economic outlook, and of course the reason behind the interest rate decision that was made. So on Friday, on Thursday, we are also going to be looking at the interest rate decision from the United Kingdom, another impactful event everyone wants to be looking forward to. And of course, you can see that this week is highly jam-packed with a bunch of high impactful events that will be influencing the sentiment in the market we are looking at. So we may likely see an extended sideways trading activity, and if we do not, we will be looking out for structures that will definitely be guiding our trading decisions for today. So grab your favorite beverages and let's dive right into the market. Now, the first asset we are going to be looking at today is the USOILSPOT as usual. And I already have a position triggered already on this asset, but we are going to be taking a dive into it, see what is really happening in this market and what are the chances that both buyers and sellers have for this week. Now, before we go into the technical details on this in this market, I would love that we take an insight, or let me say a flash look into what is driving the sentiment in this market and how it's likely going to be influencing how price action is going to behave. Now, as at this morning, while I was checking the economic event from China, we saw that there was a disappointing economic data, that is the China's retail sales grew by just 2.1% in August, missing market expectation, while growth slowed down to 4.5%. And this signals weaker economic activity and lower demand for crude oil. Remember, China is the world's largest oil importer, and if their economy is not doing well, it could be a red flag for buyers of the commodity, and this may dovetail to will definitely reflect on the chart as price action, which we are going to be looking at in detail. However, there is one factor here that may likely, despite the fact that the potential of oil prices is looking bearish based on the couple of economic feature I talked about as regards to Chinese economy, we may likely see some bullish traction due to the fact that there is a weaker US dollar at the moment. Now, despite this downside pressure on oil, the ongoing weakness in US dollar driven by the expectation of a large interest rate cut by the Federal Reserve later in the week, could provide some support for crude oil prices, help limiting the loss that started last week. And of course, this may lead to uncertainty in price direction, while as market participants may likely want to wait for this event to happen before making any investment decisions, which may lead to extended sideways trading activity. And in fact, I do have a simple structure that we can actually use to navigate this market. But before we go into our execution time frame, that is the 1 hour time frame, let's take a quick look at what things are looking like on the higher time frame, so we can have a broader view into the behavioral patterns of market participants in this environment. And in fact, after looking at the 4 hours time frame, you will note the structure from last week still remains the same. As you will see here, the market has been on a downtrend. In fact, we were able to spot this after taking into account the character of price action since the month of June. And interesting enough, we were able to identify a descending channel. As you will see here, when you connect the series of lower highs, we have the resistant line of that descending channel, and then when you connect the series of lower lows, we have the support line of that descending channel. Now, within this old descending channel you see here, you can see that we have a marginal line running through that descending channel, which is definitely going to be a major factor in deciding whether we are going to be buying or selling this week. Now, besides the fact that price is within a descending channel, you will see what happened last week. As soon as price action tested the support line, we saw buy pressure resume from that particular area. Now, the question now is, will this momentum continue in such a way that it will go back into that resistant line of the descending channel, maybe breaking it out to continue the uptrend, or probably finding a barrier there again to incite a sell-off from that area? And if you look at the distance between where price action is right now and that resistance line, we are looking at over 400 pips at that point in time. Now, how are we going to be capitalizing on this opportunity? How are we going to be managing our positions around this area? So to help us navigate this, I was able to spot my key level at the $68 area, a level which has been a key determinant of price action for it's been a long time, this level area. So let's look at this. So going to as far back as hold on a second, please. I think we have a technical issue here. Hold on a second, please. So I think if we go to as far back as March of 2023, I think it still extend further than that. You will notice that this area had played a significant role in pushing price to the upside. So whenever sellers push price down into the structure, we see how market participants deemed the US oil spot cheap enough to buy. And the same thing continued into last week. As you saw, we saw buy pressure resumed from this particular area again, pushing price to the upside. Now, with our key levels situated at the $68 area, now for those of you who do not know how we use our key level usually serves as a yardstick guiding our trading activity for the new week we are about to go into. Now, if price remains above our key level, we want to be looking out for patterns and structures that support the idea of buying, and we will not be considering selling unless price drops below the key level and then find selling pressure on lower time frame to join a bearish move. Now, with this simple understanding we have here on the 4 hours time frame, let's scale down into the execution time frame, that is the 1 hour time frame, and let's see how market participants have been reacting, or let me say relating to the current key level we're seeing here on the 4 hours time frame. And it's going to be a major determinant of whether we will be buying or selling today. Now, when you scale down into the 1 hour time frame, I was able to identify a simple trading setup, as you will see here. The first thing I did was to take into account the character of price action. Price remains above the structure, we will continue to look out for patterns, and price remains above the structure, we will continue to look out for patterns and structures that support the idea of buying this particular asset. Now, with this ascending trend line in place, let's now see how the market has been playing out since this new week has began. Now, if we zoom into the current structure, you will see that the week actually started on a bearish note during the Asian session. Right from the $69.30 level, we saw price drop to the downside and found support at the $68.62 area, giving us a structure that supports an uptrend scenario. And of course, with this range bound structure identified here, it makes things a little bit easier for us to navigate this current market dynamics. You know how we do it. Navigate this current market dynamics. You know how we do it. Whenever we identify a range bound structure, we exercise patience, waiting for the market to complete their negotiations between the buyers and sellers, where the we look out for signals in the form of either price breaking down the support line to give us an opportunity to sell, which has never happened, or breaking out of the resistance line of that range bound structure to give us an opportunity to buy. So I actually bought at this area this morning at the $68.65 area after observing that there is buy pressure around this area on Friday. And with the situation, we're looking at something like a reversal setup in the form of a double bottom structure where the resistance line of this range bound structure appears to be the neckline of this reversal setup. Now, of course, to validate this reversal setup, we need price action to break out, retest, and then we can not ignore the potentials that sellers can also come into play. And if we are really going to be selling the USOILSPOT, what are these things we want to see on this chart that will make us feel comfortable doing so? Well, first of all, I would like to see price break down the ascending trend line, which interestingly lines up with the support line of that range bound structure we identified earlier. Now, with a beautiful confluence at the $68.62 level, we could be looking out for selling opportunities. But one thing I want to see here is confirmations before jumping into that sell position, because considering the ascending trend we saw since Tuesday of last week, it could turn out to be a false breakdown. So instead, I would rather want to see price breakdown, retest the structure of my lower time frame. It could be the 5, 10 or 15 minutes time frame to join a decline. And in fact, if price goes ahead to break down the $68 area, then we will be adding more sell positions to our existing trade. But at this point in time, we maintain a bullish bias. Price still remains above the ascending trend line, and of course has just broken out of the resistance line at the $69.30 level, which also doubles as the neckline of that reversal pattern we identified earlier. So this is my simple setup on the USOILSPOT for today. I hope I made myself very clear. But if you have any questions or you need some further clarifications, feel free to drop your comments in the comment section below. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. So stay tuned in, guys, and do not forget to support the channel. Your likes are very valuable to me. If you have found this content helpful and useful in making your independent trading decision, I will really appreciate your support. So let's give the video a like, and let's make the like tally with the number of people on board. And thank you very much as you do so. See you soon. See you, Wakocha Kingdom. Good morning to you. Glad to have you around. Hello, Sahid. Oh, thank you very much. Well, she's doing very well, though we still have about 3 games to go, and though she's still in contention anyway. So after the 3 games, we'll know whether or not she will be on the medals table. But we are very hopeful that things will work out in our favor. So thank you very much, and God bless. God bless you too. Thank you very much, Sahid. So in the absence of no questions, I do want to assume that we are all on the same page, and as a result, we shall be moving on to the next asset on our watch list. I do hope you've marked out these levels accordingly as we have discussed here. They will definitely be helping us navigate this current market dynamics today, and of course for the first half of the week. So the next asset we are going to be looking at for this week is the GBPUSD, that is the British pound against the US dollar. And in the matter of fact, I already have a buy position triggered right now, as you will have seen that the British pound has started the week on a strong positive note, following the growing pressure on the US dollar, with speculations around a Fed rate cut in the during the course of this week. Now, before we go into the details on our execution time frame, let's quickly look at the fundamentals behind the scenes that has been influencing, and of course is likely going to influence the sentiment in the market, so that we can have a broader perspective into how this will influence price action this week. Now, the top of the list here is the weakening of the US dollar. We've talked about this week in, week out, and it continues to manifest itself on whole the assets against the US dollar. And as at this moment, the US dollar continues to face pressure as expectations for a large interest rate cut by the Federal Reserve continues to grow, driving the dollar to a fresh weekly low. And this gives a strong boost to risk passive currencies like the pound sterling. And of course, if we go to the UK front, inflation data is going to be influencing the Bank of England's decision this week. Now, the UK's consumer price index data for August, along with the Bank of England's monetary policy decision, will be influencing the sentiment in the market this week. And of course, market are looking forward to the CPI data from the UK. I think that is coming up on Wednesday. We talked about this earlier, as market participants are expecting a rise in CPI from 3.3 to 3.5%, and this will impact the Bank of England's rate expectations, with investors anticipating that the Bank of England may likely keep their rates at the 5% it was cut to last month, and deliver only one additional rate cut later this year. And for me, this is a positive development for the pound sterling, and it's looking as if the path of least resistance for pound sterling is going to be to the upside. Now, talking about that, we also have some other event coming up later this week from the United Kingdom. We are looking at the retail sales data, which is going to be coming up ahead of the Fed interest rate decision. So all eyes will be on the US retail sales data as well, which is forecasted to grow by 0.2%, slower than July's 1.0% increase. And if the data all comes in as market had expected, or even worse than market had expected, this could further influence the British pound positively. So for me, and based on all the parameters and fundamentals we are looking at this point in time, the path of least resistance for the British pound remains to the upside. Now, let us navigate through the chart to see what path is it going to take. Is it going to retrace before the uptrend happens, or will we just see price continue to the upside here? Now, to help us have a deep understanding into the behavioral patterns of market participants, we want to go into the higher time frame. Now, I actually started my analysis here on the 4 hours time frame, and of course the structure we saw last week still remains the same, but just with a little bit of twist. Now, remember, for those of you who are with me last week, remember we did emphasize on this strong bullish momentum that started at the beginning of the month of August, and after the strong bullish momentum, we saw price transition into a consolidation phase, which within a descending channel. And if we are talking about chart patterns, you will see that price action appear to have evolved into an uptrend continuation pattern. Now, if we take into account the structure, this impulsive move, and then we mark out the resistance line and then the support line of that consolidation phase. Depending on where you are looking at it from, you may be seeing a flag pattern, and most importantly, that's not what we want to emphasize on, but the fact that this is an uptrend continuation pattern where the breakout of the resistant line of that pattern is all we need to continue the uptrend move, which appear to have happened at this point in time. I was lucky enough to capitalize on this while I was preparing my daughter this morning. So, and in order to help me navigate the structure, we have our key level for this week at that psychological price level at the 1.31500 area, a level which had played a significant role in determining the direction of price action in the last 2 to 3 weeks. Now, if you look at that level here, you will see that we saw price break out of the structure for the first time during the last week of the month of August. It became a demand zone for about a week or so before price broke down, and then we saw selling pressure persist for about a week thereabout, as you will see here, selling pressure, though we had the breakout here last week Friday, but the later part of the day brought price down into the structure. Now, while I was analyzing this market during the weekend, I saw a confluence between the resistant line of that range bound structure and that key level at the 1.315, making it a key area for me to look out for trading opportunities. And of course, you know how we use our key levels. When price remains above our key level, we want to be looking out for patterns and structures that supports the idea of buying. And if price drops below our key level, we want to be looking out for selling ideas. Now, if you take a look at this beautiful confluence, you can see it lines up with our descending channel, where if selling pressure persists below the structure, we could see a situation where price respects the resistance line, pushing price down into the support line, which never happened, as we saw price break out of that structure, giving us signs that buyers may likely continue to take advantage of the weaker US dollar. Now, with a beautiful confluence around this area, what are our chances for this week? Now, for those of us who had missed out on this buy opportunity, let's exercise patience and see if the market is likely going to come back, retest the structure from a theoretical standpoint to continue that uptrend move. And if that is not the case, we may likely see an uptrend continuation pattern form here on our lower time frame to confirm the uptrend move. Now, with this information we have gathered here on the 4 hours time frame, let's scale back down into the 1 hour time frame, that is our execution time frame, to see how the market had behaved since the beginning of this week and what sort of structural pattern has evolved on the chart, which will be helping us navigate the structure. Now, scaling down into the 1 hour time frame, I was able to identify a simple setup right here. As you will see, the market started the week on the strong bullish note right around the 1.312200 level, and then the first resistance for this week started, major one I mean, started at around the 1.31445, which gave me the resistance line of that range bound structure. And that point gave me an opportunity to buy, breaking out of that structure and of course breaking out of this key level. I think this key level is too wide. Allow me to reduce it. I think it's around here. Yes. So around here, so we have another breakout of the structure, giving me 2 buy positions at this point. Now, for those of us who miss out, there's no point banging our heads right now that we've missed out on this opportunity, and let's exercise patience. There is a high chance that price could come back into the structure to retest it and continue the uptrend move. It's just the beginning of the week, and we could be seeing some early buyers for this week. And as the UK and US economic events draws near, we may see some profit-taking activity happen as major key players get out of the market, waiting for that data to come in before making an aggressive bet. And this profit-taking activity could reflect on the chart as a retrace into structure in anticipation of the next move. So this could likely take 2-3. So let's exercise patience. If you had missed out on that one, let's wait and see if the market will come back and retest that particular structure. Placing a buy limit within this area is still looking reasonable at this point in time. Now, it is not all the time that the market does the thing that is coming back to retest the structure. If the momentum is so strong and market participants have a very strong feeling due to insiders information that inflation is easing in the United States and that the Federal Reserve are going to be cutting interest rates depending on whatever magnitude it is. If it's going to be a 50 basis point, 25 basis point, the momentum could just continue to the upside without retracing. So if that is going to be the case, then we will look out for uptrend continuation patterns around this area. So if we start seeing consolidation phase maybe around this area evolving into maybe a bullish rectangle pattern, pennant, flag, or any form of uptrend continuation pattern, we mark that structure out and then position ourselves at the breakout of that structure to join that uptrend move. So let's see what happens here. It could take 24 hours. It could take 2 hours for it to manifest. But I will be giving update. I just hope that I have the time during. I hope the event closes very early today for me to look at the chart. But I'm just trying to give us a picture into what we are looking at so that we can independently do this on our own. But if I have the time, I will definitely give us an update on both my TradingView and Telegram platform. So on the GBPUSD, and based on the fundamental factors we talked about earlier, the path of least resistance for the pound sterling is to the upside. However, if price drops back down and this old breakout turns out to be a false one, where price drops back down into the descending channel below the resistance line of that descending channel we identified on the 4 hours time frame, below the key level at the 1.315, and we begin to see selling pressure evolve around this area, this could welcome selling ideas as price would have been back within seller's territory, and this could lead into a situation where price drops into the support line of that descending channel we talked about earlier, dovetailing to a minimum of 140 to 150 pips thereabout. But I doubt if that will happen. But if it does happen, let's be on standby to capitalize on that move. So this is my simple idea on the GBPUSD for today and for the first half of this week. Let's see how the market will play out, and if anything new comes up, I will definitely give us updates on both my TradingView and Telegram platform. So this is my simple view. If you have any questions whatsoever, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. And also do not forget to give that video a thumbs up. Your likes are valuable to me, and it also helps this community to grow. As the more the like tallies with the number of people on board, YouTube algorithm will push the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. So let's see if we have any questions before we move on to the final asset on our watch list for today. I'm already running out of time. I have about 30 minutes to be at the venue. So let's see if there are any questions before we move on to the final one. All right. So, in the absence of no questions, we will be moving on to the next asset. I hope you've marked out the levels, the structures we've identified here. They are going to be playing a major role. And if you have not, probably due to the short time, the replay is still going to be live for you to rewatch the video and then mark out those structures. So, let's move on to the final asset on our watch list for today. So the final asset on our watch list for this week is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And in fact, the week has started on a choppy note. Remember, price action hit an all-time high record. This is the first time price action will get into the $2,589.50 level. This happened last week, where we had a tremendously profitable run through the course of last week, as we kept on buying and buying this asset, scoping over 500 to 600 pips in profit across all the buy positions we had last week. And for those of us who are part of this profitable journey, well done and kudos to you. For the go challengers, I wasn't able to scalp the gold market last week, but I did a swing position on this asset, and I kept on monitoring at the venue while I was with my daughter. But this week, for go challengers, we will not be running go challenge until Wednesday. I will be back in my at my desk tomorrow, and by probably on Wednesday I will be back on. I will definitely give us updates on my Telegram platform as regards to that one, so please bear with me, guys. So on the XAUUSD for this week, we are within uncharted territory at this point in time. Price is at a record high, and for those of you who have been with me for a while, you know how this is. When price is within uncharted territory, we need to be very, very careful, as the fear that price could crash from this point, since it's an unfamiliar territory. Market participants are not used to this price level at this point in time, and this could lead into profit taking activities, which could reflect on the chart as consolidation moves, choppy market conditions, or even a retracement phase to the downside. However, there are a lot of various factors behind the scenes that could probably give more strength to the gold commodity and make it break out of this uncharted territory. Well, we've talked about some of them. The Federal Reserve rate cut expectations, where I did mention that market are pricing in the possibility of a 50 basis point rate cut, which was fueled by evidence of subsiding inflation. Now, this dovish outlook could further support the bullish sentiment for gold prices. Now, another factor behind the scenes, which is very, very important for us to also note, is the performance of the US Treasury bond yield, which obviously is influencing the US dollar as well. And of course, we all know how the US Treasury bond yield is directly proportional in value to the US dollar. That is, if the US Treasury bond yield is doing very well, it usually influences the US dollar positively. But if it is not doing very well, the US dollar tends to be devalued during this time frame. And as it is right now, the US Treasury bond yield and the US dollar remain at a near 2024 lows. It's at a nearly near a year low at this point in time, hereby providing a tailwind for gold as a non-yielding asset and of course a safe haven commodity. Now, the anticipation of the FOMC meeting this week and the Fed chairman's speech too as well, and the retail sales data all from the United States may hold traders back on any aggressive bet at this point in time, as they will likely want to wait for the market moving decisions from this event to decide whether to buy this commodity or sell it. And in fact, we might see a situation where the market had already priced in the expectation of this interest rate cut, and when the rate cut happens, we could see a crash from this particular area, irrespective of it of a 50 basis point or 25 basis point. We need to also take this into account, and of course, identifying structural patterns on the chart is going to be helping us immensely to position ourselves for such move. Then another thing that is happening this week is the Bank of Japan and Bank of England's interest rate decision. Bank of England's interest rate decision is coming in on Thursday. The Bank of Japan's own is coming in on Friday, and this could also stir volatility in the market, influencing the gold prices as well. We don't know how that is going to be, but our structures, which we will be identifying in a minute or so, will be helping us to do that. Then finally, we cannot talk about gold without talking about the geopolitical tensions going on in the global scale right now. First of all is the ongoing Russia-Ukraine war, the Middle East instability, and of course the attempted assassination of Donald Trump, which happened this morning, which further underpin demand for safe haven assets like gold, copper, silver, and the likes. With geopolitical tensions like this, we usually see a high appeal for safe haven asset. Now, if you would ask me, the path of least resistance for gold is still looking very bullish, despite the fact that we are within uncharted territory. But what we are going to be looking at now is how momentum come in. Will it first of all result in strong profit-taking activities, which could result into bearish moves, or are we going to see that move just continue to the upside from this particular area? Now, before we go into our execution time frame, let's take a look at the higher time frame so we can have an holistic perspective into what is really going on in this market. And there's nothing much to say here on the 4 hours time frame, as we do have a simple structural setup that will be guiding our decisions this week. Now, the first thing I did here is to take into account, I don't want to go really far, as we are within uncharted territory, of course, so there is nothing to relate with in the past here. So all I did here was to take into account the character of price action in the last 3 to 4 weeks, and the first thing you will observe here is that there was an extended sideways trading activity which lasted for about 4 weeks, as you will see, primarily confined within the $2,530 level and the $2,470 area, giving us a consolidation phase, and of course highlighting the prevailing uncertainty in the market at that point in time. And you know how we use our range bound structure. It helps us to understand what is going on, and the breakout of the structure will give us a signal of where price is likely going. And of course, with a breakout happening last week, which we were lucky enough to capitalize on, the question now is, are we going to be seeing profit-taking activity happen, bringing price back into structure to retest it in an attempt to continue an uptrend move? Now, this is where the scenario I was painting earlier comes in. So I was talking about the possibility that market may have priced in the interest rate cut coming up this week. And if that is going to be the case, even if there is an interest rate cut, which usually from a theoretical standpoint should favor the gold, we may see profit taking activity happen since the market had already priced in that expectation, and price may likely crash back into the structure before it begins another bullish potential. And if we look at the distance where price is right now and the structure, we are looking at a minimum of 580 pips at that level, or a maximum of about 720 pips to catch here, which is quite massive. And of course, we do want to be on standby to capitalize on this move if it happens. And if the other scenario is going to be the case, then we may likely see price continue from this 2,586 record high zone. Now, in addition to this observation is my key level, which is at the 2,530, and if remains above our key level, we shall maintain a bullish bias here. But in as much as we maintain a bullish bias, we will not ignore the possibility of a counter trend move that could bring price back into the structure. Now, with this understanding here on the 4 hours time frame, let's scale that back down into our execution time frame to see how the market has been reacting to this new record high we are finding ourselves in. Scaling down into the 1 hour time frame, we will begin to see things much more clearly. So for me, on the 1 hour time frame, I was able to identify a simple trading setup. Now, the first thing I did here was to take into account the character of price action in the last 3 days, and of course I can see an ascending trend line. So the first thing I did was to mark it out, and of course you know how we use our ascending trend lines. As long as price remains above them, we will continue to look out for patterns and structures that support the idea of buying this asset. Now, in addition to this ascending trend line is a range bound structure which we can never ignore at this point in time. Now, if you look at what has happened since the new week began, price started around the 2,578 level, rose into a new high at the 2,589.50, and since then we saw selling pressure resume from that particular area, making it a barrier for buyers to continue that momentum. And as a result of this, we have a range bound structure to work it, making our job a little more easier to help us navigate this particular structure. Now, with a range bound structure here, you know the next thing we do, we wait for signals in the form of either a breakout of the resistance line giving us an opportunity to buy, or the breakdown of the support line of that range bound to give us an opportunity to sell. Now, let's talk about the potentials buyers have at this point in time. Well, at this juncture, I'm yet to take a position on the XAUUSD, and you know why? Because of the uncertainty around this area being an uncharted territory, and the possibility that major key players in the market may step aside waiting for the UK, US, Japan data to come in before making any aggressive bet. But if you would ask me, since the path of least resistance remains bullish and the fact that price still remains above this ascending trend line, we could actually risk some of the profit we made last week to test waters around this area and see if bullish. I'm very clear on that bullish potential using this current structure we are seeing on the chart. Now, let's talk about the potentials that sellers have at this point. Now, since we already have a range bound structure here, it will make a lot of sense that we see price action break down this week's low at the $2,577.50 level to join that decline to the downside. Now, for me, selling around that area is looking promising at this point. However, I still think that the potentials of sellers could even come earlier than that, considering one interesting structure I was able to identify here. So let me show you quickly what I'm talking about. So if you look at the structure here, after taking into account this impulsive leg that started last week, you will see that price action appeared to have evolved into what we call a I can't remember that structure again. Is it a pennant? Is it a pennant or but I can remember anyway. But what I'm trying to say here is that this kind of structure usually gives us a reversal idea, that is price breaking down this support line of that range bound structure to inside that sell-off, which could be a move that could go into that key level or structure we identified on the daily time frame, where we were looking at a minimum of about 530 pips to a maximum of about 700 pips. So what I'm saying here is that we may likely get an opportunity to sell before the sell of the 2577.50, but I would want to see a confirmation happen before I do that. Now, a breakdown of the trend line of the support line of that reversal setup will give us a signal. Then we wait for price do a retest of structure on our lower time frame, and this could result in continued selling pressure. All we just want to see is signs that buyers are finding it difficult to maintain their position above the 2586 level, and then if this persists and continues, selling is looking promising, and then having a sell stop order below the 2577.50 could welcome more selling ideas. So we are at a crucial juncture at this point in time. Let's see how this is going to play out. Like I did mention earlier, the path of least resistance remains very, very bullish, but we cannot ignore the potentials that market may have priced in the rate cut by the Federal Reserve. And in fact, even if the rate cut comes in as market has expected, we may see a crash as well. So to help us navigate the structure, we have a simple setup. We have a potential reversal setup identified here, and of course a range bound structure which will be helping us to navigate this market dynamic this week. So I hope we mark out these levels accordingly on our chart, as we are going to be using it to navigate this market for this week. And if anything new comes up, I will definitely give us update and Telegram platform. So this is my simple view on the XAUUSD. I'm supposed to be running by now, but let's see if we have any questions whatsoever. Questions, further clarifications. I'll take the next 5 to 10 seconds off. Let's see if there are any before we start rounding off on today's session. And for those who have clicked on the like button, I really appreciate your support. Thank you very much as you have done so. And for those of you who are yet to do so, it doesn't cost you anything. This is the cheapest way you can actually support this community to grow. And thank you very much as you do so. See you in about 5-10 seconds from now. Cheers. So I see your comment here from Ismail Napari. Hello Ismail, how are you doing today? So Ismail says here that connecting trend line on the daily time frame from May 23 high and April 24 high is showing that price action is likely going to drop. Of course, we never can tell, but we already have a structure we've identified here on the 1 hour time frame, which will be helping us to prepare ourselves for both the bearish or bullish potential at this point in time. So all we just need to do is identify these levels and then use it as a yardstick to guide our trading activities for this week. So like I did say, a quick summary, the potential is still looking bullish. All fundamental factors behind the scene still supports price going to the upside. We have the geopolitical tension, Russian-Ukraine war, the Middle East situation, the assassination attempt on Donald Trump, and of course we also have sentiment that Federal Reserve is going to be cutting interest rate, which usually favors safe haven assets like gold, copper, silver, and the likes. And all signal here says price is going to the upside, and of course we've identified areas where we are going to be looking out for buying opportunities, and we never ignore the potential that sellers could come in as a result of market participant pricing in already the expectation of an interest rate cut prior to this week, and this could lead to a drop significantly to the downside. So we've mapped out these potentials already, so all we need to do is exercise patience and continue to monitor how price action reacts to the structure we have on this chart. So thank you very much for the observation, Ismail Napari, and I think it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate your support on this one, and for those of you who liked, thank you very much. I really appreciate, and it has been a wonderful moment. Thank you very much, everyone. And we were able to take on all the three financial assets we will be monitoring for this week, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD. And we were able to identify simple setups. I hope you mark them out accordingly as we have done here. And if you have done so, well done. Kudos to you. All we need to do right now is exercise patience and allow these structures to mature. And for those of you who are joining in late, who had missed out on most of what we've talked about so far, I will encourage you to rewatch the live stream. It's available after the end of the live session, so you can see what we talked about and reflect on it and use it as a yardstick to guide your trading decisions today. I think it's on this note we have to call it a day here. And for those of you who joined for the first time, I hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with me, the better you get to comprehend my analytical approach, which I assure you will definitely improve your own trading decisions. So I look forward to seeing more of you same time on Wednesday, I guess, yes, 8:30 a.m. West African, 8:30 a.m. UTC, 9:30 a.m. West African time, as we come here again to review how well these assets have done and of course prepare ourselves for potential volatility that will be coming as a result of the economic event we are looking forward to for the second half of the week. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.